Good afternoon, everybody. Mark here at TapeTally.com for your Week 19 recap. Let's take a look at some of the weekly statistics for the overall index ETFs. S&P 500 was down about 1%. The rest of the indexes were down a little bit less, except for the Dow Jones, which was down about 1.5%. Gold has broken its long-term upward trend line, which we'll take a look at here, and it had quite a brutal week, almost down 4%. I've changed my stance from neutral to bearish on that specific commodity. Oil, which was bearish last week, was down quite a bit this week. It's down 5% on the year. Volatility was obviously up this week because the rest of the indexes were down, and the Canadian markets were down almost 2%, maintaining the bearish outlook. Let's jump right into the weekly time frame here. Take a look. We're still stuck in the middle of the range here, so I'm maintaining the neutral outlook, and that's the same for basically all the indexes. We're just going to maintain the neutral outlook. Let's go to gold here, and we'll take a look. Now, the reason why I'm changing my stance from neutral to bearish is because of this candle right here that we printed this week, and it broke this long-term trend line. Now, this trend line has been in place for, 3.5 years, since late 2008, and it finally broke this this year. It's been basically, churning since let's take a look, maybe July of last year. So it's almost a year. It's been just, we kind of had the blow off top here, and we're kind of up and down and up and down, and we finally broke it. We did have this bounce that we talked about at the beginning of the year, right off the trend line, and that was a good move. And I did play some of the gold stocks off here, but we saw this break of the trend line. So that's going to maintain my bearish stance until we probably see a break of, up here. I'll start to probably get neutral in this area here somewhere, and then once it breaks here, we'll probably see a more bullish trend. Okay, let's take a look at oil. Same kind of thing. It's basically been dead money since late 2008. And it continues to churn sideways. We did see some movement here with some decent volume upwards here that we could have seen, but once again, that was a false breakout. Volatility, can't tell too much from the weekly time frame, and Canadian markets maintained its bearish stance here, and it was down this week. Let's jump right into the daily time frame. Go back to the S&P 500. We're basically stuck in a range right now for the S&P 500. I've talked about this for many weeks. We've seen a lot of the breakouts fail, and we've seen a lot of the breakdowns fail as well. Now, one of the differences, I guess, that we saw last week was that there were quite a few breakdowns. We saw a lot of gap downs on poor earnings or perception of earnings of poor earnings. So we did see that. Now, I'm not willing yet to get on the bearish side of the market. It is the summer months, so we're going to see a lot of churning on lower volume. And basically, the most important thing right now is to step away from the market, in my opinion, and you need to protect your capital. I've learned this the hard way, is that you need to protect not only your financial capital, but your emotional capital. So, I mean, we could be trading in and out here, but the issue with that is you're going to get frustrated when you're trading a market such as this one, where it's it's kind of up every day, and we're seeing it's easy to make the money. And what happens is typically traders will think that will continue forever, but it doesn't. The market has times of correction, and it needs to take a breather, and that's healthy for a market. You need to accept that. And so what we're going through now is a correction, or it could be the beginning of some huge bear market. We're not sure. Nobody knows what's going to happen exactly. So I think right now, maintaining a neutral rating and just stepping away from the market and just seeing how things go. Now, what may happen is that you may think that, well, if the market breaks this level, I would have missed a whole bunch of upside movement. But what I find is that, if this market is truly strong and we break this, there will be ample time for making money in the market. You just need to be patient. It's basically it. It is truly that simple. You don't need to gamble here. Being heavy in cash is a great idea. Just go through this. Basically, we did see this break of this, but maintaining this range here is not a bad idea. Just continue on here. Same with the Dow Jones. We're kind of at the bottom end of this range. If I wanted to put a little bit of cash to work here, I may actually buy this market here with the anticipation that we're going to bounce again off of this bottom trend line. I know there's a lot of negative headlines out there, but we've seen this market bounce and then bounce again. It can't make new highs, so the probability is that it'll bounce again here. And if it doesn't, well, then we start to implement strategies that go short. Gold, on the other hand, is a bit of a different story, like we talked about on the weekly time frame. Oil, same kind of thing. I mean, we had a horrible week last week, and it continued on this week. So now let's take a look at volatility here as well. We talked about maintaining a neutral rating last week, and we kept that rating this week basically because it didn't do too much. It was slightly up, but I mean, we had all these candles here. This whole week was basically just a little gap up and a little gap down. So one thing I wanted to talk about here, these 5 days here, we started this week on the 7th. We had a lot of gap downs. If you notice, there was a gap down on Monday, and then the bulls pulled it back up. Gap down on Tuesday. We had more movement, but by the end of the day, the bulls pulled it right back up. Gap down on Wednesday, same kind of deal. We ended up on the day. Now, there was a slight gap up on Thursday, but we finished down, and a gap down on Friday, and we ended up. So it's very confusing, I guess. And so I find that when the market gets confusing like this, the best thing to do is just step aside, let the bears and the bulls fight it out, and you'll be able to trade the middle, basically. Picking tops and bottoms is very difficult, and I'm satisfied personally as a trader just taking out the meat of the market, the middle. So that's basically all I wanted to talk about this week. We're stuck in a range for the most part, and possibly there are some short opportunities in gold, but for the time being, I'm maintaining neutral on the overall markets. Thanks a lot, and have a great week.